where do you guys think is the best place to put capital? Or do you just like spray across all those layers? Like help me kind of think through what you think is the most like defensible of these layers, or we'll get the biggest of all these layers.
Yeah, like my favorite has been the AI robotics companies because I think it's like new, like people aren't really pricing it in.
Okay.
And like it's kind of, I think we're kind of like where we were when ChatGPT came out in the land of AI robotics.
Nice.
So there could be like a really big run there. And then also, I think the long term value capture makes sense because like they own the customer relationship, which I think is going to be super key. I think like owning the customer is where we've seen like a lot of value accrue. It's just like the switching costs are the other question, right? So it's like, you're pretty loyal to Grok. I would say, I use it sometimes, but I just like am more used to ChatGPT. So like I'm there, but much lower switching costs than, a consumer going from one chatbot to another versus, a company replacing 10,000 robots with 10,000 different
Right.
robots. And then also just kind of at the very bottom of the stack with these like data centers on these long-term leases. I think you can probably do really well on chips, but that's just like NVIDIA. That's just like dominated by NVIDIA, which is already like, multi-trillion-dollar company. So it kind of depends what your risk return goals are in my opinion. I think the hyperscalers could do really well. I just like haven't gotten to the level of like underwriting them to that point yet. I think the model companies are a little bit scary to invest in, and they're also private, so it's hard to get exposure there. And then the app layer is for me super scary because it's like, you have all these things with like you come out with an app and then like the chat GPT like one shots you and just adds a feature. So yeah, like I think if you're looking for just like broad-based AI exposure, I think like everyone knows it's just like these big companies, you could probably just buy tech stocks. And then if you're looking to go a bit deeper, it's like, investigate these data center plays, investigate the hyperscalers, maybe some of these AI robotics companies, maybe something even like for like, earlier on in the supply chain, like more energy based or like rare earths or something like that. I haven't spent a ton of time there, but kind of those are the areas that are kind of how I think about it. But primarily for me has been AI robotics companies and then the data center companies.
I'm pretty excited about like specialized inference. I think demand for inference is going to go insane. I think we're at the beginning of kind of that trend still, even though a lot of people use ChatGPT, like in enterprise hasn't picked up that much. And as inference gets faster, it unlocks new workflows that you can do. So you get a bit of a flywheel going. The application and like model layer is definitely the most interesting side. You have like the frontier labs who are now continuing to build out frontier models, but also starting to become like bigger application players. Anthropic's launch of Claude Code was like generational, totally changed the game, did a lot of damage, like the Cursors and the Windsurfs. But on the like flip side, you have now Cursor launching their own models, Cognition launching their own frontier models. So the like major application companies are becoming labs, and the labs are also becoming more frontier application companies. So I think we'll see like a bit of a re-rating in both directions. Cursor just had this massive raise this morning at $30 billion post, which seems crazy for an application that is, on the surface, super susceptible for disruption from the labs, but they're becoming a lab now. So it'll be interesting to see what happens there. These are much harder to invest in, obviously. They're all private, but the trends in demand and the trends in usage and capabilities ultimately drives everything. It's going to drive like whether CoreWeave is going to get wrecked on this leverage. It's going to drive like what demand for energy we need, what the build out looks like. Like Duncan mentioned before, there's a lot of early planning for build out happenings. Like what's inference usage going to look like in 5 years? Like the physical world moves slowly. It takes a while to get power online, approvals and stuff. So we got to keep an eye on the application layer because it drives everything else.
So it's very clear that you're talking about there's trillions of dollars coming in CapEx for this, and we've got to build all these data centers and get all these GPUs and get all this energy, et cetera, et cetera. But then we've had like DeepSeek, and I think the Kimi K2 thing also plays a role in this. Is like, is there a world where we actually don't need all this? And maybe we just like find ways to really make this stuff more efficient, or maybe you don't need these massive data centers, and instead you can use something else. It reminds me of like the Silicon Valley show. I forget what the word is, but where they like made things super, super efficient. What was the word that they used? Fuck, I remembered it this morning, but I can't remember it now. But compressing? Like, is there a way that we don't need all this build out and we can just like compress, and the tech will improve that way? And maybe we're missing something, or do you guys not buy into that?
Yeah, so I think like China specifically is under some GPU constraints. So people like to say that like scarcity breeds innovation.
Yeah.
There's probably some element of truth to that here, but when numbers come out from DeepSeek and Moonshot, who built Kimi, saying like they trained this for $5 million, it's not, you're not really comparing apples to apples. That doesn't account for like talent cost, hiring people, doesn't count for R&D, previous training runs. It's just like that final run. It's also a lot cheaper to be the second and the third to reach a certain level of performance. If ChatGPT or Claude release a new frontier model and you're like distilling from that, it's so much cheaper. I think training wise, like we're going to continue to see like heavy capex to push the next generation of models. It gets like, exponentially more expensive to get new improvements in capabilities. But I do think that like I don't know if that's going to influence the demand for the build out that much, because inference is just going to explode. Even if Kimi is cheap to train, it's not that cheap to serve at scale. It's cheaper than some of the closed models, but as it gets cheaper, people talked about Jevons paradox before. Like, I still think there's so much low hanging fruit in terms of application and inference to be brought online. So I'm not sure it's going to impact it that much.
And the whole Jevons paradox thing is basically like, if it becomes cheaper, it gets used more. So like the demand actually doesn't like go down, right? So, and I don't think we've really seen like the limits of how good these models can get. So like, if we get more efficient at training them, more compute can still help make them better, right? And then also like all this inference that Patrick's saying. So I think like, Elon fucking talks about that like intelligence is just like a factor of energy, and we're gonna like cover the whole earth in solar panels or something, basically try and harness as much energy from the sun as possible to energy equals intelligence. So it's like, obviously, if it gets cheaper, then hopefully to train these things, and then hopefully we can just make them better and like serve them more. So I think like that's like the kind of bull case for AI. I don't really fully understand, like, unless we start just to like not make any progress or have like fully saturated the demand for inference, which it feels like, especially with the AI robotic stuff, we're nowhere close to doing, then that's maybe where you can add that. But the demand like from all these people is like, power is like in the US is like the hottest commodity in the world, because they're just so desperate to get more compute online.
There's also like industries, depending on the industry, are still super sensitive to increases in performance. If you're just like a casual ChatGPT user, you might not really reap the benefits of like GPT-5 versus GPT-4o if you're just asking it for like recipes. But if you're a software engineer, if you're a lawyer, if you're a doctor, a 1% increase in capability, like you will pay significantly more for that. It influences your job. It's significantly higher leverage. So as long as we still see some improvements and those fields don't reach like a saturation point, I think about it as like, when is an industry going to stop being sensitive to improvements in the models?
Right.
Because when we hit that point, then like the cost just drives down to zero and margins kind of evaporate. The game will change significantly. But for now, so many industries are like hypersensitive to this stuff. So it continues.
And then it's the whole like what new industries will like emerge. And I think about this with AI robotics. It's like, okay, like if you can, all of a sudden your cost of labor like drops immensely, what is now feasible, right? That would just like, a lot of people are like, oh, can we open up this plant in the US? And be like, there's no fucking way, because it just doesn't make any economic sense. But all of a sudden, if the costs come down for these things, like what new industries or what new tasks like are feasible, like whatever, like something crazy like mining asteroids, like, okay, now because we can just send these robots up into space, we don't have to worry about people dying. Can we like try and do thing with that? Like obviously that's like a suit that might be 50, 100 years out in the future, but that's just an example of like what now becomes possible from this like these new capabilities. Like, because I think a lot of people and like get scared of AI because they think of as like a one-to-one replacement, like it's going to be replaced one-to-one. But like the optimistic view of this whole like AI revolution is that like it's just going to grow the economy and it's going to grow the pie so much bigger for everyone, that even if like your job is like a smaller part of of what it was before. The whole economic growth in the pie is just so much bigger that everyone's going to benefit. And I think that's like the optimistic way to look at this versus just looking at like, oh, this AI is going to one-to-one replace people's jobs. It's just going to grow everything.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show's for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.